Recently, we've started to notice an interesting trend happening in the real estate investing community. There's been a lack of listings, which is causing end users to bid up the price of homes. And so, in this environment, combined with high interest rates, this is giving less investment opportunities for real estate investors. Now, investors are still looking to buy, but because of this, they're trying all sorts of new ways to create their own deals, which we do think is a great idea. However, the latest trend we're seeing with investors thinking of buying multiplexes with low rents is something that we don't completely love. And so in this video, we'll talk more about this and what we would do instead. But before we go on, check this out. This is a heads up that you can get our complete Toronto real estate investing guide for free on our website. You can see things like a breakdown of typical costs, rents, appreciation, sample financials that you can change up to see how it affects your returns, and even try out a quiz to see what might fit you best. I'll put a link to the free guide in the description below. Don't forget to like this video and subscribe to our channel so you don't miss other content like this made just for real estate investors in Toronto. In theory, the multiplex opportunity could make sense. You take over a multiplex with low rent. For example, if a building has rents that are 20% below market, you might be able to get a 20% discount on the price. And so if you manage to refresh a building with market rents, then it's possible to get a pretty 20% bump in market value. On a $2 million initial purchase, that's a big $400,000 gain. But the big problem is that it's not that easy to tackle something like this, which is precisely the reason existing landlords are selling them. There's a lot of uncontrollable factors like how long it takes, how much it'll cost, and ultimately, not many people are suited to do things like this. Now, don't get us wrong, getting creative isn't a bad idea, and high return potential is also great. But here's the thing. It's very important to look at the risks involved too, and an opportunity like that has risks that are extremely hard to quantify, which means it is hard to justify an investment like that. And so if you are looking for better growth and big returns, we'd argue that there is a safer way to do so, especially in today's market and what's going to be changing very soon in Toronto. The first thing you should understand is that those who are bidding up prices are primarily end users, and they generally have a preference for houses that are fully renovated. And because of this, we're actually seeing a growing price gap between unrenovated and renovated properties, and so this could be your first opportunity. Here's an example. An unrenovated property might have a $300,000 discount against a renovated one. So if you can put down $150,000 to renovate it yourself, then you end up making the difference. Now, just be mindful that the market price could swing either way during the renovation period, and so the $150,000 gain isn't entirely guaranteed, but to us, it is still a much lower risk investment compared to buying a multiplex with low rents. Here's another opportunity. Just like turning over tenants, if you are able to bump up rents in an existing building, you can substantially add more value to your property. But a more reliable, safer way to do this is to add in extra bedrooms, extra units in an existing home, or even more livable square footage like a laneway or garden suite. So here are more examples. If you end up converting a single family home into 2 units and end up getting $1,000 more in rents each month because of this, this could mean an extra $240,000 increase in property value based on a 5% cap rate today. If you make it into 3 units, you might get a $2,000 bump in rents, and that could mean an even better value add bump. And then if you add a 3-bedroom laneway suite in the backyard, this could mean a $3,500 bump in NOI per month, which ends up being close to an $840,000 bump in property value based on a 5% cap rate, or a $700,000 bump in property value based on a higher 6% cap rate. So as you can see, there are still many opportunities to help you generate higher returns in our current market with less risk, and these types of opportunities can make a much more secure investing option from our point of view. What's more is that things are definitely changing for the better too. Right now, there's actually not that many builds that can allow 3 units in a house in Toronto, but our city is actively working on allowing 4 units and scrapping development charges and multiplex conversions. And once that's changed, it can open up a lot more growth potential for investors who are up to take on development projects like this to add more housing supply. Now, we would be more than happy to have a personalized chat to discuss more about these kinds of opportunities here in Toronto. Just hit the link in the description below to get in touch with us. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto, and here's how it's like to work with us. First, we'll do a discovery call with you so we get to know each other more and help you get your financing ready, and then we'll teach you how to analyze deals. Once you're set, our sales team will work with you to find the best opportunities on the market and eventually help you buy the best one for you. Houses typically need a bit of renovations and we'll help you with a detailed scope of work and contractor connections. And then once you're ready to rent out the place, we also have leasing and property management services if you need it. So if you want to learn more about any of this, just head over to our website at the link down below. Again, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. You can also head over here to check out our other videos. Thanks so much for watching and see you in the next video.